Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to look at what I just dubbed tonight's title as the Trifecta, and this is just something that comes together as 3 points of interest that really gave us a good reason to be looking for a bounce in the S&P. Now what we're looking at right here is just a measure of the cash index, which will vary from the S&P futures prices that we typically trade throughout the day, and you can see that relationship here on the chart. Usually when you see prices quoted on CNBC or anything like that, you're usually going to be looking to this cash index price, and that's something that's worth comparing as you try to look at what, the major public is looking at, I guess you might say. I point the differences between these two products out to show exactly where we came down into this 200-day moving average. Now you might look to that and say, well, what's so special about the 200-day moving average? You came down to it here, and it just blew through it. So how did you know that this is going to hold? Well, first of all, I did not know that it was going to hold. But when you see a major index come to a critical area of support like this, and then you have market internals that back you, that is what really helps set this up. So the first piece of the puzzle was the S&P coming down to the 200-day simple moving average. The second piece of the puzzle is this put-call ratio that, interestingly enough, and this just looks like people have just doubled down on their puts, but what I was noticing most in this is notice how for months now, it's just kind of meandered back and forth, but over the course of the past 2 weeks, give or take, especially within the last week, that put-call ratio has really elevated. That means that the majority of the public is piling into put options, and most of the time they're going to be wrong. The fact that this moving average continues to ascend kind of makes me feel like you may be seeing some people double down on their bets, but we'll have to wait on that a little bit until we get through the election to make any more decisive moves against it. But then the third piece of this puzzle is noticing where your Bollinger Bands stand outside the Keltner channels. So these are all very basic things, but they're things that always help keep me in check, which is another way of saying keep me from chasing moves. When you see volatility that's extended outside of these levels, you are typically due for a reversion back to the mean. Now we're still a good ways from the mean, but at the very least we knew that these signals would keep us from chasing moves to the downside, and with the S&P is up a solid 50 points today, those are worth noting for future setups. So hopefully you find that helpful. One last time, and we've only got 2 more days that we'll have to cover this, but John and Raghi will be 2 of our primary traders tomorrow afternoon, tomorrow evening, as we get into live trading with the election. If you would like to sign up for that, it is still available. You'll have a link just after this video, and I hope to see you there.